We're off. We're running. Liz McDonald, Steve Cortes, Scott Shellady, John Layfield, all are here to figure out what's going on with this market. And John, I'm going to start with you. Same question for everybody. Why this divorce between what happened in France last night and the stock market this morning?
Well, I think the reason that you have that divorce is because it's not a big enough effect on the economy. I think you have something like 9/11 where you have the economy, especially in New York, almost destroyed for a short period of time. This is not as horrific as this is, and this is a tragedy. It doesn't affect the overall economy. And by the way, when you have a disruption in the world, the U.S. equities are still the safest place to be. So if you see a disruption like a Brexit, normally money will flow to U.S. equities.
Same question for you, Scott Shellady. Why this divorce?
Well, number one, there's a lot of money still on the sidelines, Stuart, so anything that's going to push the market lower, those people are going to get back in. So we've got a natural bid there. Number two is I also agree that it's a place for safe money to go. But number three is that everybody's economy is doing so poorly. Ours looks to be doing a little bit better than everybody else's. So we've got all this money coming from overseas for the reach for return, not just homegrown money. So there's a bunch of reasons, but none of them really have to do with the economy, why our stock market still has a bid.
You're right. Steve Cortes, same question to you. Why this divorce between the terror attack and no impact on our stock market?
Right. At least no impact yet, Stuart. Again, I don't think we should get too complacent. But I think the reason today, and this may seem counterintuitive, but bad news, and this is horrific news, bad news can be good news because it can mean continued central bank accommodation.
Yeah.
And when you look at Europe, for instance, I have to think the ECB this morning is extremely worried that an attack like this could really damage consumer sentiment. It could really damage travel to Europe. As you talk about, are people going to be as willing to go out in cafes and restaurants and destinations? They might not be, but what does that mean? It means the ECB will have even easier money policy.
Yeah.
It's a sad state
Chuck
that we're
out
in global markets,
Chuck
but we're
out
in
the
that
money.
condition.
You're right. Yeah, I think you're right, Steve. Just chuck out that money, Liz.